This is Mid-Atlantic Women in Agriculture's Wednesday webinar, Estimating and Tracking Production Costs. Our presenter today is Shannon Dill, Extension Educator, University of Maryland. All materials discussed during the presentation can be found on our website. With an archived presentation, we will not be able to take live questions, but all questions can be emailed to the presenter. Her email address is provided in the presentation. And a special thank you to our sponsors, Mid-Atlantic Farm Credit, Delaware Department of Agriculture, and Maryland Department of Agriculture.
I've got my contact information here if anyone wants to reach me. Again, we will have this recording posted as well as the slide sets. They're posted on the website. So we talk about farm profitability and how to have profitable farms, and it really takes not just someone that's great in the field, a good producer, it also takes a good manager. So today we're going to be talking on the management side of things and discussing estimating production costs, creating these crop budgets, using a cash flow statement, and then at the end, we'll talk a little bit about record keeping and how to track your production costs, or tips on tracking your production costs. So one of the best ways to start with looking at that are enterprise budgets. And if anybody's heard of these enterprise budgets, you can put those in the chat pod if you use those. An enterprise budget is a great way to estimate your production costs per crop. And if someone's looking at expanding, if they're looking at growing a new crop, it's the best place to start to figure out what your income and expenses will be for that. So it's an organized listing. You have your gross income and your costs and what your expected net income is for a particular enterprise. The budgets, you can find many on the web. When you create one yourself, you need to decide on a unit that you're going to grow on. So is it going to be by the acre, by the bushel, by the ton? If you've got livestock, sometimes it's by the head or by the hundredweight. For some of their smaller, maybe it's not growing a whole acre of a particular vegetable. Maybe you are doing it by per 1,000 square foot. So you've got to decide on your unit that you're going to grow on. And then the sections include your investment, income, expenses, both your variable and your fixed, and then your profit. So when you start to estimate these, you're going to itemize your receipts or income received for a crop. And really, in order to do this, you need to make an estimated yield and price that you're going to receive for that crop. So how many tons, how many bushels, how many pounds could you expect by producing that? And what is the price, what is the market price that you may be asking for that crop? Often there'll be two different prices there, especially, I talk probably in this session, I'm going to talk more about vegetables and fruits as compared to livestock, but the same can go for livestock. You may have a retail price and you may have a wholesale price. So often these budgets might have 2 or 3 different categories depending on, say, byproduct, value-added product, or a wholesale or a farmer's market price compared to maybe a wholesale price, bulk price. You're going to list the inputs and production practices required by that crop. So what chemicals, seeds, feed, what's going to be needed to grow them. And that also includes things like mulch, fencing, tillers, equipment. What are all those things you need? Stakes, maybe it's something for harvesting, maybe if it's something for marketing and packaging. It will help you evaluate the efficiency of a farm enterprise. So if you can really sit down by enterprise and look at your costs and returns and reconcile those each year, you'll learn a lot more about what crops are making you the most money and maybe which ones are costing you more money. It'll also help you estimate the benefits and costs of major changes in production practices. So if you want to make big purchase items like machinery or land, you get to know the true profitability of what you're growing. And it's not an exact science. It is an estimation. It doesn't take into account things like drought, disease, crop losses. So often, again, you're estimating these. This is what you hope to produce. So when you're budgeting, you're going to be able to determine the profitability. You're going to understand your break-even costs and pricing points, and I have some examples later how you can use these budgets to make some very serious decisions about what the price should be and how much you need to produce. And then you also understand the input structures such as labor inputs, chemical inputs, fixed equipment, those type of things needed for that crop. And it's also helpful in planning crop rotation schedules and your product mix. So when we talk about enterprise budgets, if you are growing a very traditional crop or livestock, the ones that you can find online are quite detailed and are probably going to be pretty accurate for you. These are things like field corn, soybeans, traditional dairies, traditional hay enterprise. They're going to be pretty consistent with what you're doing and what you can expect. If you're growing specialty crops, they're much less detailed and they're less accurate because of differences in regions and inputs. So if you are growing organically or a niche crop or rotational grazing or value-added activities, those enterprise budgets that you find may not be as accurate and are not as cookie cutter as what some of the traditional crops are. There are some great templates out there, but definitely only use those as a guide or a benchmark to what your own costs are. So a very simple internet search of enterprise budget for a particular crop, and then often I'll add extension on there, helps me find other enterprise budgets. So here's the 6 parts that we're going to talk about of the budget, and we've got the investment and establishment. We have the gross income. How do you get gross income? It's your yield times your price. Then you've got your variable costs, the actual cost to produce that crop. You've got your fixed costs, which are your costs that you incur no matter what. You still owe the bank on the land or the machinery or your taxes. And then you've got your net income. So here's an example, and I'm hoping this shows up okay. We don't need to look at the numbers very specifically, but this is an example. You can see I've cited Iowa vegetable production budgets on here. This is for eggplant in a 100 foot by 4 foot bed. And again, I think it's important to understand the units. So that's the unit that we're growing in, is that amount of space. We're going to plan to grow 130 pounds of eggplant, and we're going to sell those for $1.40. And then you can see the net income. One thing I do want to point out here, so you've got your supplies, your seed, your soil mix. We're using a cover crop here. We're going to mulch with straw. So all of those expenses are included. Also, labor is included, and that's probably one of the things I see left out of a lot of crop budgets is the amount of time that you're spending on that particular crop or enterprise. So, eventually, maybe you're not paying yourself right now, but eventually you want to pay yourself for the amount of time that you're spending there on the farm with your farm enterprises. The next is your pre-harvest costs. So those are your bags. You're going to bag those. You've got your labor. And then you can see you've got your variable costs. Your ownership costs here are what they're considering as fixed costs. So they've got an irrigation system. You've put some money into a system. And then you've got machinery and you've got a land cost on here. And then you can see what your total costs are, as well as your annual returns, and what your profitability would be. So this is an example of a crop budget, making an estimation of should I grow eggplants or not. And you can see that your total is there. There's blank spaces, is the encouragement that you should, do your own research on what the costs are for each of these different categories. So talking a little bit about variable costs, and so how do we do this? each year we update our Maryland budgets, and what we do is we go out onto the market and we find out what are the expense, what is fertilizer doing this year? How much per ton is nitrogen, or how much is seed? And so this is an example of sweet corn. So seed, feed, fertilizer, pesticides, all of those things you can do some research with your dealers, with your supply companies. Prices are going to depend on the plants per acre, your varietal selections, and the quantity purchased. An example here is sweet corn cost per acre. So dealer 1 says I need 12 pounds at $10. Dealer 2 says I need 10 pounds at 11. Dealer 3 says 10 pounds at $7.50. So if I was in extension, what I would do is average those so that I had a number to put in there. If you're going with dealer 3 over the other ones, or you like dealer 2's variety, then that's the price that you can use. Those are probably the easiest variable costs to do. That's probably where farmers, it's the best place to start. And most farmers want to make sure that they can cover their variable costs with the income that they receive. The other things listed in variable costs are your labor and your fuel. Those are more difficult to estimate, especially if you've never done it before, if you've never grown that crop before, how much time it's going to take pruning or trellising or staking or harvesting. Definitely keep a log of the amount of time you do spend doing those, and consider what your hourly rate could be that you could assign to that, so a value to that hourly time. And then again, keeping a log of fuel usage, that's usually considered a variable cost, because as you increase the amount of acres, you increase the amount of fuel you use. For fixed cost estimations, you're paying these right now, so they might be fairly easy to know what your fixed costs are. These are your depreciation, your insurance, your repairs, your taxes, your interest. This is what you pay regardless of whether you plant the eggplant or not, or sweet corn or not. You've got to pay these things. So this is what we did. We did a case study a couple years ago of a greenhouse business, and this is an example of the fixed cost spreadsheet that we created from that. And what it does is list out our equipment. So this is for the depreciation. This is not depreciation as far as your taxes go. This is depreciation as far as your farm profitability goes. So what we did was we included the cost of each of these pieces of equipment. We gave an expected life to those, and then we gave a per year charge. So we know how much that greenhouse is costing us on an annual basis. So we can apply that expense to the crops, to the farm. And then what we did in this case study, we were growing specialty greens, raspberries, and baby vegetables. So what we looked at was we then took that depreciated equipment cost and we allocated it across the 3 types of crops that we were growing. And so you can see an example would be, let's see, greenhouse 3. We're going 50% specialty greens and 50% baby vegetables. And I'm sorry that's cut off on the end, but this is how we could then allocate the expense of the greenhouse to the crops. So then ultimately we can have those crops pay for, that their yield and price will pay for, their income will pay for that greenhouse. Does anybody have any questions about fixed costs or fixed cost allocations? And I'm going to talk a little bit about record keeping and kind of getting a log of even the structures and building and inventory and machinery that you have. This is often where farms, farms can generally, crops can cover the variable costs. So a crop, if you grow it well, can cover your variable costs with no problem. Oftentimes these fixed costs are where you can get into problems. Maybe you've built a bigger greenhouse than what you needed, or new tractors or new implement can be very expensive. So often, we find that people maybe use custom rates, or they don't include the fixed costs. But this is a great way to see whether that crop is truly paying for itself and being profitable. And again, so going back, and then you can see here where we allocated the different crops. All right, so I put together this crop budget. So we're going to go back to eggplants now, and I'm growing my 100-foot by 4-foot bed of eggplants. And once I have a good crop budget together on those eggplants, I can then do some math. Yes, we're doing math today. And I can make some serious decisions about my production and my pricing. So to go through each one of these, so once you have your enterprise budget, you can figure out what your variable costs are per unit. So how much is it costing me per unit? So we go back to our budget. We're able to look at the amount of our variable costs divided by our 130 pounds of expected yield. And we know that for every pound of eggplant grown, it costs 66 cents in variable costs. And again, that includes labor, it includes fuel, and then all your seed and chemical and mulching input costs. You can also do that for fixed costs. So for every pound grown, it costs about 8 cents in fixed costs. Then we can look at our break-even price. So we know that we need to charge at least 75 cents to break even on our eggplants. And at 76 cents, we begin to make our first profit, or penny. All right? And if these calculations don't make sense, or if you have any questions about them, please let me know. We can go back to the budget if we need to. Break-even price is very important. You've got to know where to set that price and where that you can accept a price for that crop. The next is break-even output. So how much do we need to grow? So if we have the 100 by 4, and it says 40 up here, I think it was 4, bed, how much do we need to grow? And we know that we need to grow 69 pounds to break even, and that at 70 pounds we make our first profit. Once we sell that 1 extra pound, we start to make that profit. And then we can look at net income per unit. So we make about 65 cents per pound of eggplant that we sell. So you can see where creating these crop budgets individually, estimating your production costs, and creating these budgets are extremely helpful in making your production and your sales decisions. And long term, for a farm to be profitable and for you to expand or to stay in business, knowing these numbers is very important. So I'm moving out of sort of the crop budget piece of it, or putting together these crop budgets. Again, I would encourage you to do some research out there on the web. They have lots of crop budgets available, great templates, a great way to benchmark and to start creating your own budgets. So I would highly recommend that. Our next piece is putting together those into your financial plan. And if those of you that are familiar with the 3 financial statements, we're not going to go over those today, but I do want to talk a little bit about cash flow. So here's your 3 financial statements, and moving forward, really having that is important. We're going to talk about cash flow, which shows your liquidity, as well as these pro forma statements, which are your projections. So your cash flow summarizes your cash inflows and outflows. It's really your checkbook. What are your product sales? What are your receipts, sale of capital assets? And then what are your outflows? Your capital expenditures, your loan payments, your production expenses. This is so important because of seasonality of farming, especially if you're growing perennial crops. You may not have an income. With grapes, you don't have an income till the second, third, or third year. So very important when you're looking at farming. Doesn't take into account your inventory or depreciation. And each year you should do a projected and an actual cash flow. So in December, as you're pulling together your your receipts for that year, your tax statements, getting all that paperwork together, it's great to look back at what your actual cash flow is and then to project one for the next year. It can help you with trying to figure out if you're going to pay down debt, large purchases, where you may have problems throughout the year. So having a projected and an actual is extremely important, both for your crop budgets as well as your cash flow. And your cash flow and your crop budgets really go hand in hand. I don't know how you could ever create a cash flow budget without having your individual crop budgets. And this is why, and I'm sorry again if this is small, we do have these, we've got templates on our website, but we also, there's lots on the web for farm cash flow statements. You can see they're posted here as last year, and then you can do it by year, by quarter, by month, however, whatever increments you want to do it in. But the reason I show this, and I like to merge this with the crop budgets, is the inflow and outflow. So how would you know how much fuel or feed purchased or fertilizer purchased or seeds and plants purchased you would have unless you've done or created a crop budget? So in my mind, it's hard to create a cash flow if you don't have that crop budget to help you make those projections and those thoughts. So you're going to use a lot of information to track, to estimate your production costs, and then to keep track of them. So it's important to know the cost of each enterprise you have. So over time, once you have developed a kind of a product mix, keeping detailed records on activities for each enterprise are very helpful. It includes your variable inputs, and it also includes your machinery, your time, and labor. Do something that makes it manageable, and I know none of us want to sit in front of the computer. You know, if you've been out in the field and then to go sit in the computer and put together your records or try to pull up a spreadsheet, that may not be manageable. Maybe there's a notepad, a way to keep a short log. Maybe you put it on notes or voice notes. A lot of times I don't want to sit there and type on my phone, so I'll put a voice memo in. Anything like that you can do to make it most manageable for you. And then once you collect that data, it can very easily be tracked in record-keeping software. Perhaps it's Excel, maybe QuickBooks, or other types of systems. I know there's some apps out there that are great. I think there's some other types of farm software that you can use. So anything like that's very helpful. And as farmers, you need to manage their business. You need to plan for profit, communicate with lenders and investors, communicate maybe with spouses and partners, you know, trying to convince a partner or a spouse that it's time to buy a new tractor or to expand the farm. Having a budget and some proof that it's going to work is very helpful. And one of the things we do try to highlight is to have a household budget. And sometimes we work backwards with people who sit down and they say, well, I would like to get started. Where should I start? And we ask, well, how much do you need? You know, how much do you want to make? Is this going to be part-time, full-time? Are you trying to pay for the farm? Are you trying to expand? How much do you need? And perhaps we work backwards in trying to figure out how to cover that household budget. All right. So this is just a little bit about managing cash, capital, and people. So if you've got accounts payable, receivable, your cash flow, your structured debt, and then your payroll if you've got employees. Record keeping is so important anymore. You know, your day-to-day records, it provides proof. The IRS may ask for your revenue, your expenses, your inventory items. Records give you good decision aids in making decisions. Maybe as an institutional requirement, so lending agencies, FSA, crop insurance, all of those require very specific and very detailed production and acreage reports. And then maybe it's something environmental, nutrient management, pesticide applications, biosolids, irrigation. They all require records that you keep and report. So there's 3 types of farm records, and I'm not going to go into depth in all of these. I've got 1 or 2 examples I want to show. Keeping your resource inventories is important, your production accounts or livestock and crop operations, and your income and expense records, so your financial records. For resource inventories, you count and assign a value to the resources to inventory your farm. Your resources include assets, which are the items you own, and your liabilities of what you owe. So this is an example we did. We had a case study. This is an equipment inventory that we put together. This is just an example of what a resource inventory might look like. It's a detailed listing. It's important for your bank to know what you have. It's important for your accountant. It's very important for your insurance company. They're going to want to know and to make sure that you update it every year, because equipment values change. Maybe not as much year to year, but every 2 to 3 years, equipment values definitely change. So you want to look at that, and you may also want to include the purchase price and what is owed for that equipment. Here's a building and structure inventory. It's another great inventory to keep if you've got some structures on the farm. What is the square footage of that? What is the purpose? What are their features? And again, important for the valuation of it. If you've had any appraisals done, if you're going to insure it, keeping these records and the record keeping for these can definitely be a benefit. And then I love this one. This was your wish list. So this is a farmer's Christmas list, right? Projected equipment purchasing schedule. So we always have that idea of what we want to do or what we'd like to get or what we'd like to work forward to. And it helps us plan for major purchases and to try to keep on track. So this is an example from when we did the, I think the greenhouse case study. So you can see on here what we wanted to do and what we wanted to purchase and how much money we would need that annually or that year to make those purchases. And this is the balance sheet. So again, this just gives you your net worth and what you can lend on. And this was an example from our case study as well. So our current assets, our intermediate, and our long-term. Just quickly about the balance sheet, it is done a snapshot in time, so you always want to make sure there's a date on there because, of course, as you make a monthly payment or pay down debt over a 5 or 6 month period, your liabilities change, or maybe you've made another purchase in an asset, so you always want to make sure you date your balance sheet. Most people do it at the end of December, so December 31st they do a balance sheet. And when I signed up for a line of credit, when we bought our land, that was the first thing they asked for. We need a current balance sheet. That's what they want to see right away. What is your husband and you, what is your snapshot there in time of assets and liabilities? And, are we going to lend to you? The next is your income and expense records. So keeping these financial statements, having a transaction journal, your farm checkbook. It includes the same as you would your personal, your date, your check or receipt number, the amount of the check or deposit, the payee or income, and then a memo is very good to add so you have any important info that you wanted to include on there, so you have a record of that. For your general ledger, you've got your receipts and your disbursements, so income and outflow. Here's an example of the cash flow budget that we used during the case study, Greenway Farms. You can see here an example of what we did. We added a lot of columns. So here's our beginning cash balance, and then for 2 and 3 and 4, we had we broke out the sales by enterprise, by crop. That way we could track that. And you can see, you know, last year we only had specialty greens. In 2009 we had many vegetable sales. We didn't have berry sales until 2010. So we had some other farm income. We didn't sell anything, and then we had some off-farm work. We also had our production supplies for those three. And without a good crop budget, we would not have had the production supplies for greens, many vegetables, or the berries. And this case study is posted. If anybody wants the information, they can, I think it's in Excel spreadsheets, but also a PDF. So here's just a summary of records. We've talked about some of these, but you know, some are duplicate, you know, some kind of overlap, some don't, but all give you very different information and good records for your farm. So again, having a household budget, what do you need to live and pay your expenses? Enterprise budgets, how much does it cost you to grow those crops? Your balance sheet, what is your assets and liabilities? You know, what is your net worth? What do you owe? What is your cash flow, both projected and actual? So this is what we thought, but this is what actually happened. Often there'll be a production schedule. So looking at planting, especially if you're doing something like vegetables or you've got livestock that would go to market, you sort of have a production schedule for that. Your production records, extremely important. Seed, fertilizer applied, pesticides applied, your yield records for FSA and crop insurance, and then any sales records. Those would be things that you keep. Other types of records, maybe there's some marketing and CSA records that you need to keep. If you're certified organic, there's organic records that you need to keep. Food safety, those with GAP certification, there's records along with those, and making sure you're in compliance with those post-harvest, those in the field and post-harvest handling activities. If you're direct marketing, maybe you're going to keep records of your customers and who's purchasing from you and how to stay in touch with them, or vendors, and then any type of lease agreements or formal, informal lease agreements. So we're going to talk a little bit about accounting now as we move forward. There's two methods of accounting. So if you open up financial software or something like QuickBooks, it's going to ask you what type of accounting method you want to use. There's the cash method and the accrual. Cash method is what we as farmers use, and I think farming and agriculture is one of the last ones that can use the cash method. Most have gone to accrual or use accrual. Cash means that you record the expense and income when you actually pay it or receive it. Accrual method is when the transaction is completed, not necessarily when you've received cash or you've dispersed cash. So as soon as you disperse it, whether that check has been cashed or not, you record it. That's the accrual method. So those are the two different kinds that you would have, again, when you turn on or open up your financial software and set up an account. By organizing your financial information, you have a general ledger. Maybe there's some computer systems that you want to use, Microsoft templates, Excel, Quicken, QuickBooks, or apps. I love going to the Microsoft templates out there, or if you're in a system, whether it's Word or Excel, and you click New, you can search which ones are out there. And there's everything from driving records. You know, if you're a farm and you're delivering produce or delivering things, you need to keep track of that mileage. There's mileage sheets, there's payroll, there's timesheets. There's lots of templates out there. There's sales records, invoices. I love seeing what Microsoft comes up with, and they have something new all the time. So there's templates out there that can help you kind of get started. You can start from scratch. So are there any Excel lovers out there? I'm a little bit of an Excel junkie. And so maybe you need to create something that's on your own to report on or to keep records on. So you can create your own Excel workbook. This is an example of QuickBooks, a screenshot. This is from QuickBooks Pro from 2007. They update it every year. You don't have to update your QuickBooks if this is something that you decide to make a commitment to doing. Unless you're doing payroll. If you do payroll, you do need to update it annually because payroll changes. But if you're just keeping your financials on there, every 5 years, I've heard is acceptable. And there's lots of different ways. Says advantages to QuickBooks, but this is also Quicken or any of the other financial softwares out there. Really, they've made them very easy to use and navigate. It will write checks for you, manages accounts payable and receivable. I think you can accept credit card with them. There's payroll features. It's very easy to reconcile and produce reports, and at the end of the year, you can search by vendor. If you're 1099ing subcontractors, it will create those reports for you. It's really makes, if you want to keep a real thumb on your financial records, having them electronically is great because you can do so much manipulation in reports and vendors to really understand where your farm is. Enterprise accounting, so if I have a seed purchase, I can allocate it towards a greenhouse, or I can create these classes within QuickBooks and allocate expenses and income to those categories, and that makes it really nice. We utilize that in my office, and it's very helpful because even though, say, we purchase pencils, it may come out of different types of budget accounts. So it's an office supply, but maybe it is a grant from a grant fund or something else. It will generate your financial statements for you. It'll create invoices. It'll maintain your list of customers and vendors. It will do cash or accrual accounting. It'll manage your line of credit and credit cards and many more. With our online banking now, it will download your transactions right into QuickBooks, and you can categorize them as you need. And that's what most of the financial software, you can download it from your bank. It will help you with your tax records, communicate with your accountant. It'll create maybe some financial ratios for you, financial forms, raising, selling, feed. Very great. There's great products out there. This says steps in using QuickBooks, but this is really any financial. You install and create a company file, decide on the start date, and the tax season is the best way to start, January 1. Review those chart of accounts. So what accounts are you going to track? What accounts do you need to keep within your business? You can look at your Schedule F, your farm taxes. Maybe you want to talk with an accountant over this, and you can modify them for your farm business. So if I don't have livestock, I can delete. Actually, QuickBooks has an agriculture chart of accounts. It includes seed and feed. Say you don't need some of those particular account lines, you can delete those. You can set up your liability accounts, so any type of loans that you have. Create your January account balance. You can enter checks. You can enterprise account, and you can organize your financial statements. This is just how to get started. You want to make sure that you're reconciling your bank accounts to your QuickBooks start date. Have a current bank statement, have your cash balances. I think I've heard QuickBooks has like a 30% abandon rate because this part does take some time. It's not something you're going to sit down in the evening and get done. It does take some time to get your Quicken account or a QuickBooks account or any other financial system modified for you and all your information in. Once you're there, it makes the day-to-day financial management much easier. And these are just some things that you can do to get started. So your current bank statement, what your cash balances are, your detailed list of transactions that haven't cleared the bank. That way you start with a true balance. Some tips that I've heard that we've used over time: purchase the physical product. Don't download from Intuit. I always liked having the CD. I'm not sure how available that is anymore. We do our updates by download, but starting off, we purchase the physical product. Look at your previous year's tax return to get information on depreciation amounts, and use your depreciation. I always work with an accountant on. Often accountants have QuickBooks Pros on staff. They can help you kind of get this set up. Omissions or incorrect entries can haunt you for a long time, so making sure that you've put everything in accurately. Fixed assets, property, equipment, you have to know the current value and accumulated depreciation. Again, that depends on whether you want to put that in there. Many people don't put all their fixed assets in. They just use it as a checkbook to keep track of. And then if you have payroll, there's some things to consider. If you do go on electronically and start using these financial forms, make sure you reconcile your monthly bank statement. Print a copy of your chart of accounts for reference, so you know where you should be putting different expenses and what you've got out there. It's very easy to put it under the wrong account. Be sure to back up your accounts on a flash drive, CD. Some people are using secure cloud systems and store in a safe location. Consider having a separate computer for financials and business operations other than a household computer, especially if you have teens or, gosh, anymore, it's like, 5- and 6-year-olds that come home with websites they want to get on from school. And you definitely don't want to risk having a virus if you've got your financials and your business information on a household computer. And save time and print checks. So if you do get all up to speed on it and that's the last thing that you haven't done, it's definitely worth having it set up to print the checks for you. And I think it even downloads, you can even download your signature now and put those on the checks, so it's all pre-printed. So there's a variety of products depending on the platform. You could go overkill really quickly if you're a small firm. So looking at what's right for you. And again, going back to something like Excel, most banks, if you have online access, you can download transactions and categorize and manage them in an Excel sheet, or you can download them to the financial software. And there's tons of tutorials out there. If you're not sure how to do something, all of them have a great tutorial on what to do. Check with an accountant. They can help you kind of get things set up and be able to keep those records, so it comes much easier at tax time how to pull it together. These last ones, I know it's hard to see on mine, so I'm sure it's hard to see on yours, but this is just an example of a chart of accounts. Your income accounts, your expense accounts. This is a sample in QuickBooks of how you would do it, and you can create sub-accounts under different things. Again, a great way to manage multiple enterprises or multiple accounts.
Thank you for watching our archived presentation of our Wednesday webinar. If you would like to see more archived Wednesday webinars, please visit our YouTube channel, or to find a schedule of upcoming live webinars, visit our website.